Hello, and you're welcome to Global Business Insights, where we consider the headlines all over the world and go a little deeper from a business perspective. Quite a bit of data came in today. The German manufacturing sector contraction unexpectedly deepened. PMIs came out at 43.4 in June, that's flash, while the services sector also lost its expansionary momentum. Eurozone composite PMI fell to 50.8 in June from 52.2 in May, again below market expectations of 52.5. In the UK, spending decisions were put on hold due to the general election, causing private sector activity growth to drop to a 7-month low. That was in the flash June PMI data coming out today. UK retail sales for May just came in at a strong 2.9% month on month, almost double 1.5% expected, and much better than last month's drop of 1.8%. US June flash PMIs just in today show composite and manufacturing PMIs rising to 54.6 and 51.7 respectively. Services PMI also up to 55.1. All the flash measures that we saw today for PMIs for June came in better than expected in the US. A bit of good news there. Earlier, we got Japan's May Consumer Price Index rising to an annualized basis, that's to 2.8% versus the previous print of 2.5%. Core CPI inflation, or inflation less volatile food prices, rose less than estimates. It came up 2.5% higher than April's 2.2% print. The core index, which excludes food and energy prices, slowed to 2.1% from 2.4% in April, marking the 9th consecutive month of deceleration as domestic consumption remains sluggish. And in the US, President Biden has banned the sale of antivirus software made by Russia's Kaspersky lab. Commerce Secretary Gina Raimondo said that Russia's influence over the company poses a significant security risk, noting that Kapersky's customers include critical infrastructure providers and, of course, state and local government. So there's a bit of concern there. Kremlin says the ban, however, is designed to stifle competition. First, to bring you a bit of data, we did get the first flash preliminary set of indicators for economic activity in the last month of the first half of the year. That's June, mostly showing sagging momentum in Europe as PMIs came broadly less than expected. The Hamburg commercial, that's HCOB June, Germany composite PMI fell to 50.6 in June from May's 12-month high of 52.4, missing market expectations of 52. Services activity showed less expansionary growth of 53.5 from 54.2, while the overall index was dragged down by a more significant decline in manufacturing PMI, which came in at 43.9. In Germany, we saw total new work inflows declining again and employment falling for the first time in 3 months. Inflation saw a slight increase in output prices from a 14-month low. Finally, business expectations weakened from a 27-month high seen in May. In the Eurozone, the HCOB Eurozone composite PMI fell to 50.8 in June from 52.2 in May, below market expectations of 52.5. Expansion was helped by the services sector, which notched PMI at 52.6, still lower than 53.2 in May. Those services slowed down. Growth in services was more than enough to offset the deeper contraction for manufacturing, which came in at 45.6, also a 6-month low. Looking geographically across the euro area, apart from Germany, which recorded a slight expansion in activity in June, the rest of the eurozone continued to record solid expansion, albeit with a slower pace of growth, easing to a 4-month low. France, however, posted a decrease in output for the second month running. Although in the UK, higher customer demand helped to boost activity levels, this was partly offset by reports of spending decisions being put on hold due to the general election. In the UK, private sector activity growth eased to a 7-month low in June. PMI Composite Output Index fell from 53.0 in May to 51.7 in June, signaling a slower and modest increase in business activity at the end of the second quarter of the year. The expansion was the softest recorded since November 2023. Flash UK Services PMI at 51.2 was also less than May's 52.9, also a 7-month low. Earlier, we got retail sales in the United Kingdom increasing 2.9% in May, over the previous month's revised to 1.8% drop. Warmer and less wet weather helped to boost spending on clothing and furniture as the sales volumes rose. Also, looking at the volumes, they rose by 1.0% in the 3 months to May 2024 compared with the previous 3 months, but they fell by 0.2% when compared with the 3 months to May 2023. Finally, on data releases, this time in the US, unlike in Europe and the UK, S&P Global Composite PMI edged higher to 54.6 in June's flash estimate from 54.5 in May, showing activity in the private sector expanding at a healthy pace. S&P Global Manufacturing PMI was 51.7 in the same period from 51.3, while the services PMI rose to 55.1 from 54.8. Both were above analysts' estimates. Chris Williamson, that's the chief business economist at S&P Global Market Intelligence, said the early PMI data signal the fastest economic expansion for over 2 years. That's the data we got in June, hinting at an encouragingly robust end to the second quarter. The data may also encourage the narrative that the economy can withstand the longer wait for inflation to recede convincingly before reducing interest rates. Also that's in the US, home prices hit a record high and existing home sales in May were essentially flat, down 0.7% from April to an annualized rate of 4.11 million units. Sales also fell 2.8% from May of last year. In summary, the US economy looks like it's ending the second half on a strong note. Europe is still showing tepid growth, with momentum actually sagging in June. Future growth in the Eurozone will be helped by the recent cut in interest rates by the ECB, though it looks like it continues to be tepid. In the UK, as the political transition stabilizes, we should see economic pickup resume. The video sharing platform TikTok has spelled out more details and plans it made with government officials to address national security concerns and its ownership by the Chinese company ByteDance as it faces the possibility of a ban in the US under a new law that forces ByteDance to sell it. In a court filing yesterday, TikTok said it had negotiated a 90-page national security agreement with the federal government to offer multi-layered safeguards and enforcement mechanisms, but Congress disregarded the groundwork when enacting the TikTok ban earlier this year. According to TikTok, the US government abruptly pulled out of those discussions and delivered a message in early 2023 that the social media platform would be forced to divest its US business. TikTok and the company's content creators brought legal challenges after Biden signed a provision into law that will ban the app if ByteDance doesn't divest by January 19th. US lawmakers speedily passed the ban following a number of classified briefings around security risks that China could access US user information and use TikTok to influence citizens. The Kremlin has reacted today to say that the US decision to ban sales of Kaspersky's software was a typical move by Washington to stifle foreign competition with American products. The Biden administration yesterday said it would ban the sale of antivirus software made by Russia's Kaspersky lab in the United States, citing significant security risk. US lawmakers who visited a jailed Binance Holdings executive in Nigeria said he is in poor health and asked the American embassy to seek a humanitarian release even as local authorities press on with a fraud trial against him. Tigran Gambarian, the head of financial crime compliance at Binance, has been held since February on charges including illegal operations, currency manipulation, and money laundering. Nigeria increases its domestic gas availability with announcement of a $550 million investment in the Ubeta gas field development project. The final investment decision FID was signed by the Nigerian National Petroleum Company Limited and Total Energy, the operator of the OML 58 license where the Ubeta field resides. The project involves a commitment of $550 million to extract 900 billion cubic feet of non-associated natural gas from OML 58, situated approximately 85 kilometers from Port Harcourt in the Niger Delta region. The gas, targeted mainly for Nigeria's domestic market, also augments the operational capacity of Nigeria LNG Train 7. Still, in Nigeria, the total debt stock rose by 24.33 trillion naira in the first quarter of 2023 to 121.67 trillion naira from 97.34 trillion naira as of December 2023, according to data from the Debt Management Office. According to a statement yesterday, total domestic debt rose to 65.65 trillion, that's about $46.29 billion, while total external debt was 56.02 trillion naira, that's $42.12 billion. Earlier in the year, the International Monetary Fund had projected that Nigeria's government's debt as a percentage of gross domestic product for the year 2024 is expected to rise to 46.6% in 2024 from 46.3% in 2023. In Kenya, President Ruto acknowledged the anger this week and promised to reverse some of his tax plans after demonstrators took to the streets of Nairobi, Mombasa, and other major cities. And in Ghana, the Eurobond investors and Ghana have reached an agreement in principle to restructure about $13 billion of dollar bonds, marking a major step since it embarked on a debt overhaul over a year ago. South Africa President Ramaphosa is having high-level consultations with senior ANC officials, alliance partners, and signatories of the Government of National Unity to get their input as he finalizes the composition of his cabinet. And looking at stocks, Nigeria All Share Index down 0.1%. That's Nigerian Stock Exchange. Johannesburg Stock Exchange All Share Index also down 0.38%. European stocks were lower as investors monitored a slew of central bank decisions and preliminary PMI data releases, which showed a broad slowdown in June. Stocks, Europe 50 down 0.69, FTSE 250 down 0.27, FTSE 100 down 0.42%, the German DAX down 0.5%, and also France CAC 40 down 0.56%, all apparently in the red. Looking at US stocks, well, although Nvidia is ahead of other AI stocks in terms of timing of current revenues driven by AI hype, Nvidia has since Wednesday slipped to number 3 behind Apple and Microsoft as the US most valuable company. Many remain concerned that markets are vulnerable to even bigger pullbacks given the part an optimistic AI narrative has played in recent valuations. As we speak, markets are mixed. I can see that the Dow 30 is down 0.02%, Nasdaq up 0.23%, S&P 500 up 0.02%, Microsoft up 0.73%, Apple also up 0.8%, while Nvidia is down 1.1%. Like I said, Nvidia is down to the 3rd position in terms of the most valuable US public companies. Today, US stocks are mixed. The S&P 500 and the Nasdaq fell, weighed down by chip stocks, while investors also consider stronger than expected US business activity data. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Thank you very much for watching. Bye-bye.